Hello everyone, and welcome to the first episode of Oil and Gas Weekly on the Oil and Gas Investor channel. On this channel, we cover the most important developments in the oil and natural gas markets, explain the key drivers behind these events, their consequences, and, most importantly, how to make money in oil, natural gas, and oil and gas equities. Let's start by assessing the current situation, because 2025 marked a fundamental shift in both the oil and natural gas markets. Oil market. The most important event in the oil market in 2025 was OPEC+ decision to start increasing production quotas. Since early last year, OPEC+ quotas have been raised by 2.9 million barrels per day, and actual production has increased by 2.3 million barrels per day since the beginning of 2025. At the same time, oil production also increased in the United States, Guyana, Brazil, and several other countries. As a result, the global oil market moved into surplus. Average WTI crude oil prices fell by 14.6% in 2025, and since the beginning of 2026, average WTI prices are already another 9% lower year over year. Falling oil prices and market oversupply are bad news for upstream producers and oilfield service companies. However, if we look at the performance of the energy sector ETF XLE, the picture looks very different. XLE has clearly decoupled from oil prices. While WTI prices are 17.3% lower than at the beginning of 2025, XLE has gained 11.3% over the same period. This indicates market euphoria. Investors are ignoring fundamentals, and hype is driving prices. Very soon, oil companies will report Q4 2025 earnings, which are likely to be weak due to low oil and refined product prices. If you hold oil producer or oil service stocks, now is the time to lock in profits. The rally in oil stocks in early 2026 was driven by hype surrounding Venezuela. However, high political risks, required investments, global oversupply, and low prices make Venezuelan oil projects unattractive. This bubble is likely to burst. Conclusion for oil. The market remains oversupplied. Pressure on prices will persist in 2026. Oil stocks are expensive, and weak earnings lie ahead. We are closing positions in oil producers and oilfield service companies. Natural gas market. The situation in the natural gas market was very different. Average Henry Hub prices surged 50.3% year over year in 2025. The key driver was rising US LNG exports. In December 2025, LNG exports reached 17.9 billion cubic feet per day, up 34.8% year over year. In 2026, exports are expected to grow another 8.9%. Natural gas producers are expected to report strong Q4 2025 results, as average gas prices rose 31.6% quarter over quarter and 35.8% year over year. We expect shares of Antero Resources, Expand Energy, and EQT Corporation to perform well in the coming months. We also expect upside in the ETF UNG. Long-term growth drivers include new LNG export capacity and rising domestic natural gas demand driven by energy-intensive data centers. If you want to stay informed about oil and gas markets and invest with us, like the video and subscribe to the channel. In January, we will begin weekly monitoring of the oil and natural gas markets, build an optimal oil and gas investment portfolio, and launch clear visual tools to forecast oil and natural gas price movements, all in one place. Leave your questions in the comments and we'll cover them in future episodes.